So I recently bought a business and I'm going to list the top 5 reasons why it was a very smart choice. I'll give you a bonus. And at the end, I'm going to discuss what I didn't do correctly. And you can use this information as a little bit of a gateway to seeing if buying a business is the right option for you. So I'm a tax accountant. I have about 15 years of experience. I'm a tax advisor for Square Accounting, sqaccounting.com. And I'm going to list the top 5 benefits of buying a business versus starting your own from scratch. A little over a year ago, I bought my tax business, and I'm going to list you the top 5 reasons why it was the right choice to make. So number 1, it was earning profit day one. I have a family to support, so starting from scratch, I've seen how that goes, and it's a very, very hard life, and it puts a lot of stress on everyone, including your family and yourself. At the point of closing the company, all the services provided after that point was all my revenue and profit. I didn't have to wait 10 years to build a book of business like the person I bought it from. I believe they started their business about 10 to 15 years before I bought theirs. And, it took them a long time to build up that book of business and eventually sell to me. I feel that that is a pretty nice exchange where the person gets paid out for all the work they've done and I take on a loan and earn profit so I don't have to struggle to build that same book of business. Now, the second reason why it's a good choice to buy a business is because with as little as 10% down, you can buy a business through the SBA. And although the process was a little bit tedious in terms of the forms and the paperwork, I felt that that was a very reasonable amount to put down, especially when it comes to earning profit, day one. With 10% down, obviously the numbers have to work, but with 10% down, you can then pay yourself a salary, which is comparable or greater than what you would be earning somewhere else. Now, I did have my own clients coming into purchasing that business, and that's how I was able to afford a down payment. Although I saved a lot more than 10%, thinking that I would need that for emergencies or just to have cash flow in place. However, what the deal that I made with the SBA is they actually gave me operating funds. So I didn't even need to have all that much more cash than the 10% down to purchase that company because they actually included within the loan operating cash just to get you through a few months of operations until the cash flow starts coming. So I find that pretty helpful, especially now that I'm looking at other deals. Having that 2 or 3 months of operating cash or more is a big help because it puts a lot less stress on you from having to collect all those accounts receivables on day one. And it can even be negotiated in a deal where you leave the accounts receivable and you just roll that into the loan as well. So there's a lot of creative ways that you can structure the deal so it's more beneficial to yourself depending on your situation. If you have a lot of cash and don't need the accounts receivable, then you can just leave it off and just buy basically the client list or the company and its assets. Now, the third reason why it's better to buy a business is because you have a lot of the processes and staff in place already, depending on how large of a business you purchase. But typically anything larger than 500K of revenue or 750K of revenue, there will be staff will typically remain on as you buy the company, and they'll have their processes, their SOPs, their structure, and the softwares that they already use. And this is helpful because you can just go in on day one and just kind of evaluate what each person is working on, where the strengths and the weaknesses lie with each person, and also if there's efficiencies to be made. But I'd only recommend to do that once you have probably a year of understanding kind of the process, or just based on the frequency of the business model itself. For my specific business model, everything happens on a tax season, essentially. So once a year, you have, these rotating duties and responsibilities. And it's helpful to see how the team operates first and then make your improvements on the back end so that the following year you can implement them and then just improve the overall process and how people work together. A fourth reason why it's better to buy a business than to start one from scratch is you have a built-in trust with the clients. They understand that you've taken a responsibility of a loan to pay for that business. And I feel that they do appreciate that because you put some skin in the game, if you're just starting off from scratch, some people might see you as kind of just on shaky ground, meaning you could be just doing this as a side business or or, just taking extra income, but not taking it so seriously. But I feel that when you take out a burden, or, not necessarily, you don't have to take out a loan, you can pay in cash. But when you make an investment in that business, I believe that they have high hopes for you making an investment in them as well, which you do have to, especially if you're very close with your clients and provide them a very good service. And the fifth reason why it's great to buy a business rather than starting from scratch is because you can choose the type of business you're purchasing based on your lifestyle. So you can choose to fit that business in with your ideal lifestyle instead of a traditional W-2, whether maybe you have to go into an office or have meetings set up constantly. But this gives you the opportunity to kind of reset your career trajectory and also lifestyle goals so that it's not a traditional job, but it's a business that fits in with the lifestyle you choose. And what I mean by that is basically, if you are a person who likes to travel, maybe 6 months out of the year, it's perfect to find a digital company or a SaaS business, a technology business, where basically everything is digitized so that you don't have to go to a brick and mortar place or meet with clients in person, etc. So that's what I would also advise is not only do you find a business that you can actually run and maintain and improve, but also something that fits in with your lifestyle criteria. So if you prefer to stay in one place, buying a business is a little bit easier because you can find, whether it be a laundromat, a car wash, etc., where you can be there in person managing, which is an easier form of management. Managing remotely is a little bit harder just because you have to be very good at managing and motivating people from afar and just making sure that they're getting their work done through the use of technology versus looking across or looking behind their computer screen and seeing the data for real. Since I'm a tax accountant, I want to give you a bonus point of why buying a business is better than starting from scratch, is because what you're actually doing when you buy a business is you're actually buying an asset. And what you can do with that asset is you can write down that asset through the use of amortization. And amortization is basically just taking a piece of that company and breaking down the purchase price over a set amount of years and expensing that on your P&L, your profit loss statement or income statement, however you know the term. But basically, if you purchase a $1 million business, you can take 1/15 of that purchase price and expense it on your P&L. So if you're making, let's just say you're making $200K of profit on that $1 million, and you take that $1 million company and expense it around $66K per year, that $66K reduces your profit and your taxable liability. So if you're showing $200K of profit, instead of paying taxes on $200K, now you're able to reduce that by $66,000, which is 1/15 of that $1 million purchase price of the business. And now you're only going to be paying taxes on $134K. There are other nuances to how you can write off assets from the business. So if you allocate the purchase price not only on a goodwill component, which is the term used, but if you can allocate it towards equipment or software or other items, that can give you an advanced opportunity to expense items quicker, thereby reducing more of your taxable income. I plan to talk more about investing in businesses and investing in real estate and just showing you the possibilities of the profit you can make and also the tax savings you can have. If you enjoyed it, please leave a like and subscribe, and we'll talk to you in the next video. Thanks.